Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. I hope you guys are having a great day wherever you are, whatever day it is for you. As always, it's Friday on the podcast, so we're bringing that Friday energy to you. And I've said this in the last two episodes, and I want to repeat it one more time. This is the first day that we're using brand new software. Whenever you use new software, you always run into problems, or at least I do. So if we run into tech issues, I apologize, but we're just going to plow right through it because, you know, that's just what happens when you get to when you get some new stuff. So it's a good day, though, because we got Matt Bowles with us on the podcast from the Maverick Investor Group. This will be an interesting one for you guys out there who are not interested in doing, swinging the hammer, doing all that value add that we often talk about on the podcast. Matt is here to talk about turnkey rentals. So just buying a rental that is ready to go, and all you got to do is just keep it in your portfolio. And that's what Matt is here to talk about. Should be a good one. Matt, thanks for hopping on.
Gabe, super excited to be here. Thanks for having me.
All right. I told you before we get on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story in real estate and tell us how you got here?
So I did my bachelor's degree in college. I did a master's degree in international peace and conflict resolution. And I was working in the nonprofit advocacy space in Washington, D.C. And I was doing important work that mattered, providing good, positive value to the world. But I realized I was never probably going to make a lot of money working in the nonprofit space. So I should probably figure out how to start to do this investing thing. Somebody's like, you should buy a house. I was like, can I afford to buy a house? I don't know. So I look into how to do it. I end up buying a 4-bedroom house. This is about 20 years ago. I buy a 4-bedroom house and I rent out 3 bedrooms to friends of mine. So I've got 3 streams of income.
House
and
hack,
all of a sudden, my house that I bought goes up in value more in the first year than my entire annual salary at my job. And I was like, well, that's pretty interesting.
Was this 2018, 2019?
No, this was like 20 years ago. This was like 2004, right?
Oh, okay.
So I'm like, wow, that's really an interesting concept. So then I start buying every book I can buy about real estate, start reading all about it. And then I take do a cash out refinance from that property, and I start using it as a down payment. I start buying rental properties in out-of-state markets. And as I'm doing this, my friends are coming to me and they're like, dude, how are you doing that? How are you buying rental properties? Like, you work at a nonprofit. Like, how are you doing? Can you show us how to buy real estate? I was like, sure, I'll just show you how to do what I'm doing. So I start showing them how to buy the real estate that I'm buying. And as I was doing that, I started noticing that the real estate brokers that were helping us to find these deals were getting paid commission, but I wasn't the one paying it because the seller pays all the real estate commissions. And I was like, oh, that's cool. They're adding value. They're helping us buy these real estate and they're getting compensated, but I'm not paying it. So fast forward now until I'm about 30 years old. So we're talking about 2007. I unexpectedly get fired from my job. Okay. So I'm 30. I'm all of a sudden let go from my job. And I'm like, whoa, my head is spinning. I'm like, what do I do now? And I'm like, you know what? I could apply for another job, or I could try to start my own business and sort of go that entrepreneurial route. And I was like, I have all these people that are already asking me to help them buy real estate. If I could just get a real estate brokerage license, start a real estate brokerage business, I could literally just keep helping my friends buy real estate, keep charging them nothing, and all of a sudden now start getting paid because I could make these referral fees or commissions from the sellers by helping people to buy these out-of-state turnkey rental properties. And so that is what I did. And then, of course, I realized another thing, which is that I didn't have all of the skills to build a business on my own. So I recruited 2 business partners, and the 3 of us together launched Maverick Investor Group in 2007. And the business model is, to this day, we've been doing the exact same thing for 18 years. We have one very specific niche specialty, which is that we help regular people buy out-of-state turnkey rental properties in the most investor-advantaged U.S. real estate markets, regardless of where they happen to live. And so we're talking single-family homes, sometimes 2 to 4 unit properties, but all residential stuff, mostly single-family homes, and they come fully renovated, long-term tenants already in place on a lease, local property management already in place so that you can own them from anywhere. You don't have to live near them, and you don't have to be the rehabber or the landlord. You can come in, do your inspection, and then close on a property that's already been renovated. It's already performing, and you can cash flow from day one. And that's what we've been doing for the last 18 years.
Nice, man. I love it. That is a tried and true strategy. It's just buying those cash flowing properties and keeping them in your portfolio. Cash flowing properties, though, where I live here in Seattle, that is a myth. And so tell me, where, whenever people talk about buying turnkey rentals, something that you don't have to add value to in order to see the profit, I'm always like, where are you buying these? Because there's nothing up here in Seattle. So what are the markets that you look for when you're looking for turnkeys?
The residents of Seattle are precisely our ideal clients and our ideal target market. Our clients are largely based in expensive markets like that, like California, like New York City, like places where there's no possible way you're going to get a reasonable cash flow on your property, and it's going to be exorbitantly expensive to buy it, right? So what we've done over the years, and I told you we've been in the game for a long time, we have the ability to operate in different U.S. real estate markets, right? And so at different points over the last 18 years, different markets have been more or less advantageous for real estate investors. And we've been able to help people buy in over a dozen different states. So right now, when we're recording this interview, a lot of the markets with the best cash flow dynamics are markets like Kansas City, St. Louis, Cleveland, Indianapolis, those types of markets, because when you look at the price to rent ratios in those markets, and then you also look at how low the property taxes and the expenses are and all of that, what it allows you to do is buy a turnkey rental property. So you are leapfrogging over all of that upfront risk that's involved with stabilizing the property and not collecting income as you're holding it and renovating it and doing all that stuff. You get to let somebody else absorb all that risk. You just come in at the end, inspect it, appraise it, do your due diligence, and then close on a performing property. And the key here is that you're able to buy a cash flowing property that positively puts money into your pocket from day one. So you're making money when you buy, and you're not needing to speculate on future home price appreciation and have that be the only way that you can make money. Because as soon as you buy and hold, right? If you're buying to hold and not to flip, all of a sudden that now activates 5 different profit centers, because you've got the potential for market appreciation. You've got the cash flow coming in every month after your tenant's rent covers your expenses. Your tenant's rent is also covering your mortgage and paying down your mortgage principal. So that's a third profit center. And if you're buying to hold instead of to flip, now you've got the most tax advantaged asset class in the United States. You can depreciate the structure of your property. You can do 1031 exchanges when you sell and defer all your capital gains tax. You can do all of that. And this is an important one, and probably the least understood profit center. When you buy to hold, you can actually profit from inflation, because home prices rise with inflation. Rents also rise with inflation. And if you borrow a 30-year fixed rate mortgage in today's real dollars, you're paying them back in future diminished nominal dollars. So instead of inflation destroying your wealth, as it would if you kept your money in a savings account, now inflation is debasing your debt, and it's pushing your home price up and your rents up. So you've moved to the other side of the inflation equation. You can profit from that as well.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. Yep. those are all great reasons to be investing in single families for sure. So you mentioned a few metros there. You said Kansas City, St. Louis, Indy. I own in Indy commercial assets, so we own self-storage facilities. And I know that Indianapolis has been, prices have been increasing there as well. Are you still seeing, those metros that you mentioned? What kind of cash flow do you generally see for somebody to buy, a 3-2? It's just a regular 3-bedroom, 2-bath house.
Yeah, so let's talk about that. So for people that live in super expensive markets like California, some of these numbers might sound amazing if they've never looked into it, but you can buy a 3-bedroom, 2-bath, single-family home in a nice suburban area with the yard, majority owner-occupied community, still for around $150,000 US, fully renovated. And so for for people that live in, I lived in Los Angeles for 7 years, right? For people that lived in LA, they're like, dude, that's, you could buy 10 houses like that in Indy for the price of one in Southern California. And the total rent that you can get from those 10 houses is going to be so much greater than the rent you'd be able to get for the one in California. That's why people are interested in this concept of geographical arbitrage. If you just take your real estate investing dollars and instead of putting them in one of those very expensive markets that do not have optimal price to rent ratios, and you move them to another market that has better price to rent ratios, now all of a sudden you're getting a much better return on your investment. So we're getting, to talk about cap rates, probably about a 7% cap rate on these types of 150K single family rentals. And that's including an estimate for maintenance and vacancy, probably about a 7% vacancy, 5% maintenance estimate, let's say, in addition to your other expenses. That'll come out to around a 7% cap rate. And that's kind of what we're getting in most of those markets. Obviously, if you leverage it and you use financing, your cash on cash return, and you have all those other metrics going on. But yeah, the thing is, home prices are going up, but guess what else is going up? Rents.
Yeah. In a lot of markets, that's for sure. When I first got started in real estate, I listened to this guy, Matt Tiriel, out of California, and his big thing was you flip in expensive markets and you buy in cheap markets. And so he was flipping, I think he lived in LA. He was flipping in LA, putting the money out there I think he was investing in Ohio. And that makes a lot of sense to me, especially if, a cap rate, a 7% cap rate, still is that, so that's a 7%. Oh, but you're buying, I guess, turnkey. And so you're not doing any effort there. So that's still pretty good. So 150,000, do your clients, are they buying with, what type of loan product are they buying with? Is it just a conventional, 20% down kind of thing?
Exactly right. Yeah. So you can qualify for conventional financing. If you do qualify for that, you can get 20% down. So it's an 80% mortgage. So you're literally $30,000 is your down payment plus some closing costs. So call it 36 grand or so out of pocket total. And then if you don't qualify for conventional financing for any number of reasons, maybe you're trying to buy in a self-directed retirement plan, or you're a foreign national, or you own more than 10 properties with mortgages, or any number of other reasons, there is private financing available. Obviously, that's higher interest rate, more money down, but some of our clients still use that to finance. But we have relationships with preferred lenders, specialize in doing all of these different types of loans. And so one of the things that we do when people come in, we always like to do personalized video consultations for people. They're 100% free. As I mentioned, our business model has stayed the same. We don't charge any of our clients any money to work with us. So we put the onus on ourselves to deliver value up front first. And then if we can help you to find a property that's the right fit for your needs, passes all your due diligence and you close on it, at that point, we get paid, but still not by the buyer, just by the seller. And if we can't help you to find that property, then we make no money at all. So we put the onus on ourselves to deliver that value up front. And one of the things we do is we help to introduce people to, for example, preferred lenders. They can pre-qualify for financing at no expense and learn what rate they would qualify for, what their monthly payment would be, what their closing costs would be. And we can help them get all set up with all that as they're preparing and looking at properties.
Right. I was choking on my water there for a second. That sounds good. So apologize. So buying one property at $150,000, let's just say if it's a 7%, 10% would be 150. So 7% would be like, let's just say 120 or something like that. So I apologize, you guys. I took a drink of water and then I breathed it in. And that is not what you want to do when you're doing a podcast. All right. So getting back into it. So you're getting about $120 a door on cash flow month on month for this, this $150,000 fake or, idea that we're working with here. That doesn't seem, that's not something you can retire on. That's not something you can, it's a little bit of money, but there's you mentioned there's other reasons to buy real estate. But a lot of times, at least what I'm looking for, I'm just looking for cash flow. Appreciation is a bonus. All that other stuff is a bonus. I invest for cash flow only. So do you generally see people coming, have people come to you for portfolios? Do you sell off portfolios? Or do people generally just do the one-on-one?
Yeah, usually what we're helping people to do is to build their portfolio. So depending on where they are, that's one of the reasons we do the consult. So we say, okay, sometimes people are just getting started. So they just want to get into their first, then their second, then their third property, and kind of at the very beginning of building their portfolio. And so a lot of times that's, using up your first 10 conventional mortgages that you have available to you from the bank. And so you're in how many properties can you afford to buy per year based on your situation and your finances and your projections. So we help people kind of map out a whole plan that's right for them. If someone's coming to us at a more advanced stage of their real estate investing journey, again, we'll see where they are now. Sometimes people are doing a 1031 exchange and they want to come in and they want to buy multiple properties. And so, for our clients, a lot of it is about building a portfolio of performing single family rental properties. And there's a number of reasons for that. A lot of our clients like the single family portfolios as opposed to an apartment complex for a number of reasons, right? One of them is that you can diversify across different markets. You can diversify, and then you can do a segmented liquidation strategy when you're ready to sell. Maybe you want to sell a couple of them, but not all of them, right? So you have the choice to do that, prune any ones that aren't performing, maybe sell any like super performers that went up in value a lot. And you just have a lot of more of that latitude as well as a diversification. And when you're going to sell a single family home, you can sell that to an owner occupant, a primary resident, someone that's going to pay full retail price for it and actually live in that property. So you're sort of building in a retail exit strategy as well, instead of needing to sell it to another investor who's probably going to want a deal and all of that kind of stuff. And so, a lot of our clients like those portfolios for that reason, but plenty of our clients also diversify, right? They buy some commercial stuff. They might buy some, different asset classes, and that they also want to buy, and residential buy and hold is just one portion of their portfolio. And that's cool too. So that's why we like to get to know people, understand what their strategy is, and then we can help them to fulfill their goals in whatever way is best for them.
Nice. I like it. So for your guys' own portfolio, do you stick to single family, or do you guys also go into commercial?
Yeah, no, totally residential, no commercial with us at all. And so that's really, we've chosen to just kind of have that be our niche, right? Like there's a lot of companies out there that are like, oh, we can do anything. We can do a REIT, and we're building a REIT, and we're doing commercial, and we're doing residential, and we're doing this, and we're doing that. And we do it all, right? And for us, we're like, you know what? We just want to have one niche specialty. And that's what we do. And so for people that want to buy and hold turnkey residential property in these particular investor advantaged markets from anywhere, that's what we do. And they know to come to us. And if somebody wants to buy commercial, or they want to do, some other part of real estate, there's plenty of things that are profitable to do in other areas of real estate also. I don't knock any of those. I will refer them out to other friends of mine or other companies or other people that specialize in those things. And those people refer their clients to us when they want, turnkey single family residential. So that's been our specialty. That's been our niche. And that's what we're helping our clients do.
Yeah. Well, good on you guys for sticking to it. That's one of the most difficult struggles I deal with is the shiny object syndrome, because there's so many different ways to make money in real estate. I've just self-storage, mobile home parks, RV parks. That's what I'm buying. That's what I'm sticking to. But I always get torn away. Like industrial sounds fun. Flipping land sounds fun. Short-term rentals, all this stuff. It all sounds fun. But you guys have stayed the course, and that's really where you make where you really make an impact. Once you focus in on one thing, you get good at it. And then obviously you're paid for it. So that's awesome to hear. I just took a peek at the clock. It looks like we have run it down. And so it's time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with education. It could be any form. It could be a book you've read, a conference you've gone to, mentorship program you've been a part of, anything. Just 2 recommendations, one for general life wisdom and one for real estate.
So for real estate, I'm going to put people onto a book that helped me out a lot at the beginning, which is called What Every Real Estate Investor Needs to Know About Cash Flow, and 36 other Key Financial Measures. It's by Frank Gallinelli. And for me, that was really important just to get the fundamentals of like understanding how to actually analyze property, what the important financial metrics are, and how to really look at that. So that's a book I would put people onto. And then in terms of non-real estate, just sort of a lifestyle book that was really impactful for me. It was called The 4-Hour Work Week by Tim Ferriss, which I read the day it came out in 2007, because that was the year I was starting my business. And I was like, man, this is a really important take on entrepreneurship. And so I've been able to run a lot of my business remotely and travel the world quite a bit. And all of that, much of it inspired by that book. So those are the two I'd put people onto.
Nice. Good ones. Yeah. Tim Ferriss, I like his stuff. He wrote one, shoot, I can't remember. It's something, Titans.
Tools of Titans. Yes. Yeah.
But it's a great book because it's just little excerpts, and so you can put it by the toilet and just read it when you got stuff going on. And
absolutely.
All right, next question is for your younger self. Let's go back to the Matt who was just getting started. I think you said in 2004 or 5 or something like that.
Yes.
Go back to him, look him in the eye, give him one piece of advice moving forward.
The advice is make your money when you buy. Do not speculate on future appreciation. At the time that I started, it was in the real estate boom that was in the lead up to the great real estate crash and recession in '08 that we had. And one of the things is it just seemed like irrational exuberance. Everything's going to keep going up, buy it, and then it's going to go up in value and then sell it. And don't worry too much about the cash flow in between because you'll make it back in appreciation. So one of the lessons that I learned from that we institutionalized in our business as our core kind of fundamental guiding principle is make sure that all of the properties are cash flowing positive at the time that you close. We help all of our clients to do that. You make your money when you buy. You let the 5 profit centers work for you. Take the tax benefits, let inflation debase your debt, and then let the tenant pay down your mortgage. And then if it goes up in value for market appreciation, that's a bonus. It's a cherry on top.
Yeah, 100%. Buy for cash flow. I am 100% with you there. On the commercial side, people are expecting rent growth, which is the same thing as expecting appreciation. And you can't do that. If your property is not cash flowing on day one, there's no reason to buy it. It's there unless it's, there are, land is not going to cash flow. There's reasons to buy properties that aren't cash flowing. But generally, if the property is an income producing property, it should be cash flowing day one, no exceptions. All right, I like that. Next question is about the U.S. It's a big place. There is a lot of opportunity out there. You've already given us 3 metros. I want you to narrow it down to your single metro that you're most excited about investing in today.
I would say just recently over the last couple of years, my business partner and I have both bought for our personal portfolios in St. Louis, Missouri, and that has just been a really powerhouse rental market. The rents have been incredibly strong. They have gone up really substantially over the last 2 years, and it's been one of the most popular markets among our clients. So if people haven't focused on that market, I would maybe put people on to that one.
Yeah. St. Louis is a good one. There are people have sent me deals there, and the houses are literally like $10,000. It's insane. Obviously, they need work, but there are some areas in St. Louis that are just insanely cheap, and I just boggles my mind how cheap they are. But good, that's a great great call out there. Moving us on to the second to last question. This is lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times things go wrong, and that is when we get to learn lessons. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it?
Yeah, it was getting exactly what I said before in terms of like buying stuff that wasn't cash flowing in the lead up to the great recession and real estate crash of '08, and then finding yourself underwater when that happened, and then having to navigate through that and figure it out and, do short sales and all of that kind of stuff. And then all of a sudden that becomes the massive learning experience that allowed us to then formulate this business model where, we would base it on these real estate fundamentals and these real estate principles where like you and I both agree on, Gabe, make your money when you buy, have it cash flow from day one. And then you don't have to worry about, what the market's going to do up and down in the short term because you're already profitable.
100%. All right, that takes us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
Yes, would love to connect with everyone here. If folks, I have put together some free stuff for your listeners, Gabe. Folks can go to Maverick Investor Group. .com/REIC stands for Real Estate Investing Club. And if you go there, there's going to be a few things there for you. Number one is a free video consult with Maverick. You can just sign up for that, grab a time on our calendar. We would love to connect with you, learn about your real estate investing goals, buying criteria, answer questions for you, and support you in your real estate investing journey. And then there's also some other just cool free stuff there. We do a lot of free educational content. So I've recorded some webinars that you can watch there for free. One of them is with one of our clients that built a 64 property portfolio, single family rentals around the country, and how exactly he did that. And it kind of takes you through that. Sort of the question you were asking, Gabe, about the scaling of that kind of real estate investing. There's also stuff there on, the tax, real estate tax strategy, real estate investing, insurance myths and what to look out for there, and that sort of thing. So there's a bunch of free content there. Go to maverickinvestorgroup.com/REIC. You can see it all there. And if anybody just wants to shoot me a personal email, it's just Matt, MATT, @maverickinvestorgroup.com, and would happy to connect with all of you. And, just let me know you can't do Gabe and you get the red carpet treatment at Maverick.
There you go. I'll put that link in the show notes. So if you guys want to reach out, all you got to do is click the little more in the description. It'll pull down that full description, and in there you can find Matt's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Gabe, thanks so much for having me, man. Appreciate it.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.